I can sell a credit default swap to somebody. And there were a lot of these credit default swaps sold in the market, and there was excessive lending. These were called naked swaps. If I have lent to somebody and I seek insurance, it may be all right. But I have not lent to somebody and I buy a credit default swap. This is called naked swaps. And there were thousands and thousands of these. The result is that the amount of credit default swaps was $574 trillion in the market. And the total amount of world GDP was only about $57 trillion. So you can see that the swaps were far, far more than the amount of the output of the world. This was a source of great problem, because once the system started showing signs of fatigue, then people wanted to get their money back, and these banks or its hedge funds which had issued these swaps were not able to fulfill their promises. And now this, in addition, there was a great deal of cheating going on, because when people were given these loans, there was a problem. There were these loan sharks, and they wanted to sell more and more of these loans. So in the beginning, the amount of interest charged was less, but gradually it became more and more. Now, as it is happening in Saudi Arabia also, نحن ندفع قسطك. How is the bank going to pay our qist? In the beginning, yes, but after a few months, you will have to pay the qist yourself. So this is what is called cheating in the financial system. The loan sharks did this, and there was excessive lending as a result of this. Well, what were the supervisors doing all this time when this cheating was going on? Mr. Bernanke believed in liberalism, and he did not want to put any checks on the market. He thought that the market will take care of itself. This was not possible. The market could not take care of itself, and there were problems. Also, the rating agencies which had the mission of rating these debt securities, they did not do their job properly. Because they had a vested interest, they gave high rates to these securities, and they earned a lot of money. There was also this concept of too big to fail, with the feeling that big banks will not be allowed to fail. The central bank will come to their rescue, and therefore, so there was the supervisor's failure, there was this too big to fail concept, and there was this great deal of cheating going on in the system. So, what does Islam do to prevent all of this from happening? First of all, it tries to inject a moral dimension in the whole business of finance. Greed has to be controlled. If you allow people to be greedy and to earn by whatever means they can, the system is going to collapse someday or the other. So there has to be an injection of moral dimension into the system. Then justice is the hallmark of Islamic teachings. لَقَدْ أَرْسَلْنَا رُسُلَنَا بِالْبَيِّنَاتِ وَأَنزَلْنَا مَعَهُمُ الْكِتَابَ وَالْمِيزَانَ لِيَقُومَ النَّاسُ بِالْقِسْطِ one of the primary purposes of the messengers of God was to establish justice in this world. And how do you establish justice in the financial system? By introducing profit and loss sharing. Within the Islamic framework, it is not possible for me to give a loan to somebody and he suffers a loss and I still make again by getting interest. No, this is not just. If I want to gain, then I must also be willing to suffer a loss. So Islam introduces profit and loss sharing, risk sharing. In other words, no risk, no gain. And does this mean that there will be no loans in the Islamic financial system? No, it does not mean that. In spite of this profit and loss sharing system, there is credit in the Islamic financial system, but then credit is linked to the real sector of the economy. I cannot lend money and you cannot borrow from me. There is no lending or borrowing of money. There is purchase and sale of goods. You want to buy something, you can buy it from me on credit and the amount was payable after some time. So this is why this restriction in Islam. Because then this way the debt is linked to the real sector of the economy. The debt will not grow faster than the growth of the economy. So there cannot be excessive lending in the Islamic financial system. Then there are a number of other restrictions which Islam has imposed to ensure that credit does not exceed the growth of the economy. The asset being sold or leased must be real and not notional or imaginary. You will be surprised to know that there are imaginary and notional goods and services being sold in the market. Yes, in the gambling market, in the hedge funds market, in all these different markets in the Western world, you can sell a lot of things which you do not own, which do not exist. And so the good being sold must be real. Seller must own and possess the assets being sold or leased. The transaction must be a genuine trade transaction with the full intention of giving and taking delivery, and the debt cannot be sold. Debt cannot be sold. This is one of the major restrictions that Islam imposes. Consequently, there cannot be excessive lending. Now, what are the implications of this for the financial system? Of course, there will be market discipline because of the profit and loss sharing. This will check excessive lending. Then, of course, there is a problem associated with this. Only the prime borrowers will be able to borrow. Only the prime borrowers, people who have the ability to repay the loan, will be able to borrow. So what about people who are not considered prime, subprime borrowers? Are they not human beings? Do not have they a right to be able to borrow on the basis of their ability to repay? This is a problem which arises, and Islam has of course taken care of this by means of its own system of zakat and awqaf. This problem has to be solved within the Islamic financial system, so that even the poor people who may not be considered as prime borrowers are able to borrow. And here is, of course, sometimes we have failed, because within our societies it is possible for a rich man to borrow, but a poor man has difficulty. And here the zakat and awqaf systems can help us introduce greater discipline in the system and yet be able to satisfy the needs of poor people. Now, what are the implications of this for the conventional Western financial system? One of the first things is that raise the share of